Hi, this is Yvonne Jones, and I'm your host today for C2C World TV. We have a special guest on our show today, and his name is Dennis Blitz. He is the author of this book that I recommend, that I use quite frequently for advice and information. It's called Save Smart, Earn More. And we all want to save smart and earn more. Don't we, Dennis?
That's it.
Dennis, I want to start the show today with you telling us a little bit about yourself, your history, and how you got involved in being the owner of the IRA Club. We met way back in 2009, and when I was running my private financial club of investors, and we had a great time. And I was starting in that in 2006 and 7, but especially in 2007 when we had the crash starting in February. Remember all that?
Oh, sure, sure. The IRA. Let me go back before the IRA Club real quickly. But I spent my whole career being an author, writing about security regulations and security rules, etc. And so, if anybody out there was or is a stockbroker, you took a series of exams, a Series 6, a Series 7, a Series 63, so on and so forth. And that was my career. I spent a career writing those textbooks. Uh, Very exciting, you can imagine. It was hard to stay awake even writing them, let alone reading them. They were pretty dull because it was all rules. But that's what I did my whole career. And then that company was sold to the Washington Post. And after 2 years of being with the Post, I just, didn't really enjoy it and left. And stumbled into something called a self-directed IRA. And stumbled is the right word because I had never come across it, even though I knew all the rules or thought I knew all the rules of IRAs and investments. I really wasn't familiar with self-directed IRAs. And I said, my God, this is something that's really important that everybody should hear about, everybody should know about, and those who want to make use of it, make use of it. And so I opened for myself a self-directed IRA and made a few investments. I'll talk about that in a second. But you know what I learned? I learned that I really didn't know nearly as much as I hoped I would know. And every time I would ask somebody about it, I would get a blank stare. And so I live in Chicago, and I decided, well, there are probably other people in Chicago who have this same situation that have a self-directed IRA and are not sure what to do with it. And so I ran an ad in online. I think it was called Meetup was this name of the site. I don't
Yeah,
remember.
meet up, right,
Was it
right.
Meetup? Yeah, okay. Meetup was the name of the site. And I said, we're going to have a meeting of people who own self-directed IRAs. And it was in the back room of an Italian restaurant. By the way, it's very hard to find an Italian restaurant in Chicago. There's only one on every block. And so it was in the back room of an Italian restaurant. And son of a gun, people showed up. And we all looked at each other and said, I don't know what to do with my IRA. And started talking. And that group just grew. We just called it the IRA Club. We had no other name for it. And it grew as slowly. But what happened was, because I had a securities background, I sort of became the default go-to person when somebody's brother wanted to open a self-directed IRA or their neighbor wanted to open a self-directed IRA. I would get a phone call and say, talk to my neighbor or talk to my brother, and that was how we started the business that we're in. That was now 20 years ago, and we now have close to 10,000 clients who have IRA accounts with us that are all self-directed. Those are the only things we do, and let you invest in what you want. So let me talk about what a self-directed IRA does. And by the way, the name of the club was called IRA Club. The name of the business is called IRA Club. That's not a coincidence. It's because I had just printed letterhead, and I didn't want to change the name. Hell, the letterhead costs money. So I said we just kept the same name. That was how IRA Club got its name. We were trying to save money on letterhead.
I like the way you think.
Yeah. so and now we don't use letterhead anymore, right? We're all sending emails. But that's the story of the IRA Club. And that was now we're getting ready almost 20 years ago. And like I say, almost 10,000 clients. have invested with us. But all we do is self-directed IRAs, a few other things, but they're always self-directed because what most people are unaware of is that an IRA can make an investment and it's got to have two requirements. The first requirement is the investment has to be for your future. So buying a house as an investment clearly is an investment for your future. Um, and many other things you can think of are investments for your future. And number two, the investment has got to be passive. In other words, can my IRA buy a farm and rent out the farm to somebody else? Yes, that's a passive investment for my future. There's no doubt about that. However, can I work the farm? And then it's no longer passive. And so it's got to be a passive investment for your future. So if I want to buy a house with my IRA, which I have done, I would have a property management company manage that property because I don't want to take those phone calls in the middle of the night. The hot water heater isn't
Yeah.
working, or the, whatever is not working, and I'm not good at that anyway. And if the property management company does that, they are good at it, and it makes the investment passive to me because I don't really have to work it. And so consequently, we have lots of people who own real estate, whether it's single family homes, multifamily homes, whether it's commercial, not as much commercial, but it's commercial. We do a lot of real estate. The point is the investment has to be passive and for your future. So what kind of investments might that be? Really, almost any investment you can think of could fit in that. Right. So do you want to own Airbnb with that? Airbnbs are very interesting investments. Can an IRA invest in an Airbnb and collect all the revenue from that Airbnb? And sure it can. Because if you're not, if you say, no, no, I go because I change the linen and I wash the windows. No, it's not a passive investment anymore. But most of the time you don't do that. Most of the time you have some management company that takes care of the daily in and out with that. So
But I have a question here. When
sure.
you put a house into like what you're saying, like an IRA or something that you're doing, does that have to be incorporated or can you do it separately and not have the property incorporated?
It depends on who you talk to as to the answer you're going to get. I can tell you, if you talk to an attorney, the attorney will always say, put the house in an LLC. And I can understand the attorney's point of view because if the house is in an LLC, if somebody sues you, they got injured in the house for some reason, uh, uh, there's no recourse to you. The LLC is the owner, not you. I can tell you that's what the attorney will say. I don't disagree with what they're saying, but I do want to talk about being practical. And being practical is this. We've been in business almost 20 years. We have almost 10,000 IRA accounts under administration. We've never seen one get sued. I'm not saying they don't. I'm just saying we've never seen one get sued. And so we have a lot of people who've spent, a good deal of money with an attorney, drawing up LLCs. Other people have said, nah, no, don't think I need it. And as a practical matter, IRAs are, I don't want to say they're never sued because it can happen, but we haven't seen one in 20 years. So
And the thing, but the point I appreciate, I'm glad hearing that too. That's an excellent point. But you technically do not, there's no requirement saying you have to have your house or anything incorporated in order for it to be an investment in the IRA. Is that correct?
no, don't have to.
That's excellent.
Yeah,
See, that's a really good point to know because there's a lot of times where when I'm helping people too and instructing them, I'm saying, look, my experience goes back, 25 years in investing, right? And one of the things I know is that the minute you have a corporation, an LLC, you're going to have to come up with 20K most likely on a retainer fee for an attorney. So that's
yeah.
probably primarily why the attorney says, hey, let me advise you on the
It,
LLC.
yeah, it may be. I think the attorney the attorney has two motives. One is, this is going to, put another layer between you and the investment, should there be risk. But there's also the motivation of getting that $20,000 fee for doing the LLC. So it's I can tell you If your IRA own, we've never had one sued. We just don't know what happened. You know, it's not that we don't know what happens. It's that we just don't have a practical experience with it. Uh, uh, we did have we've had people call up and say, "Gee, I don't like the way the hot water heater is working." I say, well, "Hell, call the property management company, tell them to put in a new hot water heater." That's about the most dangerous thing that's ever happened was we had to replace the hot water heater, or there've been a couple that we had to rewire properties because the property was so old it had gone into service long before the code had changed in that particular community. So things happen, but they do. So let me talk about the investments that people make. Surely the most common investment is real estate. The people are familiar with real estate. They like real estate. They feel they understand real estate. That's terrific, wonderful. And I say that's terrific because real estate, compared to the stock or the mutual fund that a person may own in their IRA, real estate is different in that I can drive by it. Oh, there's the house that my IRA owns, as opposed to that mutual fund, which is I don't know where it's at. It's at somewhere in the off in the ether. We don't know where we don't really know where that's at. So it's a real investment. It's a solid investment. It's going to pay rent for as long as you own it. Hopefully, besides paying the rent, real estate tends to appreciate, and so it's going to go up in value. So that, but we're seeing so much more creativity than just real estate. We're seeing a lot of people say, "Hey, I really think the need for prefab homes are going to be tremendous because people don't want to live in a big house anymore. They're empty nesters. They want to live in a smaller house. A prefab house can be put up and sold really 120, $130,000 compared to $300,000 for a brick and mortar house or 400,000 or more. So that's become a very popular investment for IRAs to buy prefab houses or to even build prefab houses. We have several builders who use their IRA. Mobile homes. There was a time when I was a young kid back when you know you know Jonah was in the whale. But when I was a young kid, that if you lived in a mobile home, my God, you were on the edge of society. Hey, have you been to a mobile home park lately? No, they're damn nice, and people are there, and they're happy, and that's fine. So mobile homes, um, people want to know about buying empty vacant land and hold it for future growth. And we have people who have done that, but I have to caution anybody who buys vacant land, you're going to have expenses. Your IRA will have expenses. The IRA is the owner, and the expense is going to be property tax. So even while it's vacant, there's going to be a property tax bill. So you've got to figure out how am I going to get money into the IRA to pay the property tax while I'm waiting for this bonanza to come,
Right.
which may come, next year or next decade or never. And so vacant land becomes a little, I don't want to say tricky, but it becomes a little more complex because I've got to make sure I've got adequate cash flow somewhere that is going to pay the property tax. That doesn't happen with rental property. So it could be rental property, could be a single family, could be a duplex, could be a multifamily, whatever we like. Could be a mobile home, could be a prefab homes, which we're seeing so much more of, so much more. Now let me go on and repeat what I said a moment ago, which is what are the requirements? The investment's got to be for my future and it's got to be passive. It's not something I'm working. In other words, I know there's somebody right now who's saying, well, my IRA should invest in my business. No, because your business is not passive. You're working your business. That's not passive. So it's got to be a passive investment for my future. Well, really, wait a minute, that's anything. That's almost anything, right? So could my IRA Invest in gold. Sure. I'm not an expert. I can't tell you gold is a good investment or a bad investment, but I can tell you that I understand. Can IRAs invest in Bitcoin? Well, son of a gun, yes, they can. And we have many IRAs that are invested in Bitcoin. I'm not recommending that as an investment, I'm telling you, many people like that as an investment, and their IRA invests in it. So really, almost any investment you can think of can be done with your IRA dollars.
Oh, that's nice.
And your IRA dollars are sitting right now at, Fidelity or Schwab or any one of those, and they're in a mutual fund. And IRAs do have a cost. It's $195 a year to have the account. And then we do charge $195 a year per asset. So the first house would be 195, second house would be another 195, third property, whatever you have. Next one, we've got a couple people who invest in boat docks. They're doing fine, by the way. They're doing wonderfully. Um, um, uh, the whole marina, I should say, not the docks, but the marina, it would be a 195 investment. I think once you get to the sixth investment, that price goes down. And Pearson says, wait a minute, I have my IRA at Fidelity. I have my IRA at Schwab. I have my IRA at Vanguard. I have my IRA someplace else. And it's invested in mutual funds. And I don't pay anything. One of the great fallacies of IRAs is they don't charge for you to invest. Not so fast. IRAs do charge a great deal for you to invest. They're very expensive to invest in because the IRA does, they say, and you don't have to do anything. We have these experts who are going to manage your account for you, and you're going to always get rich. And there are investment managers, and they do get paid handsomely, by the way. And where is that money coming from? From your IRA to pay them. Wait a minute. When I call and ask a question about my mutual fund holdings at one of those firms I've mentioned, somebody answers the phone. They're very nice. They answer my questions. Do they have to pay that person? Sure do. They have clearly got to pay that person. Where's the money come from to pay them? From your IRA account. What about the mail they send you? Somebody's got to, type it up and put it in the envelope and lick the stamp and God knows what. Is Fidelity paying for that? Is Schwab paying for that? Well, in the short term, yes, but they immediately turn around and charge what? Your IRA to do that.
Hmm.
Do they have an accounting system to track the owners and what they own and the investors and what they own? Yes. Do we pay the accountants? Sure. Where's that money coming from? From the IRA. And on and on and on. As a matter of fact, you are saying to yourself, wait a minute, I never got an invoice from the IRA. What is this guy talking about? Well, the investment companies have all figured out very quickly, we're not going to charge the person. That's why we don't have to send an invoice. We're going to charge the IRA for these services. So you aren't paying, the IRA is paying. Well, but what do you own? You own the IRA. And so that's like saying, I own IRA Club. It's like saying I don't, pay for the electricity. IRA Club pays for it. Well, son of a gun. And I can't take that money out anymore. It's gone. It went to Edison. So we're going to see a tremendous amount of money come out. I can tell you, there's something called a 12B1 fee. Um, and it's in the prospectus. They tell you in the prospectus. Of course, you never read your prospectus, and don't worry, 99.9% of the people never did. And so they put a lot in the prospectus that they know you're not going to read. And so the 12B1 fee is something which they disclose. They tell you that the IRA charges a 12B1 fee. And even if you read that, you say to yourself, well, I never heard of that. Couldn't be too much. Gone. Don't worry about it. Well, what is the 12B1 fee? Remember that nice person that sold you the mutual fund? That's a salesperson. Salespeople get commissions. And they just tried to said, we don't call it a commission, we just call it a trophy fund fee. And you are paying a commission to the person who sold you those mutual funds, even if they sold it to you on the phone and you never met them. And how often they pay them a commission? Every year you hold that fund. So you may be paying a commission for 10, 20, 30, 40 years. I can tell you, there's not really total clarity. I mean, it's pretty well buried. They do a great job of varying their fees, but there's not a lot of clarity. But I can tell you that approximately, from what we can figure out from reading the prospectus, it's about 3.5% annually to own a mutual fund. Now, there's some people who've done that and they get 4.25. There's one people who've done it, they get a little, less, about 3.25. We get about 3.5% when we do it, when we try to figure it out. And so if you have $100,000 in your account, you're paying $3,500 a year to get that free mutual fund.
Hmm.
And what do we pay next year? The same or more if the thing goes up, or if it goes down, you could pay a little less, but that's not much of a thrill. So the mutual funds are very expensive to hold. And the thing that bothers me is they aren't clear to you what they're going to charge. A self-directed IRA company, not just ours, all self-directed IRA companies are very clear. We have a fee schedule. It's laid out. It's clear. You know exactly what it is. Now, how in the world are they charging me on a $100,000 IRA $3,500 or so a year, and I never see it go out?
Yeah.
Well, it's simple. They take the amount they're charging per year and divide it by the number of trading days, about 260 trading days a year. And some years it's less, maybe it's 252 trading days. And they take out that number divided by the number of trading days, 252 or whatever it might be, and take that little bit out every day. And this really, every time I read that in something, I think of the old Chinese proverb about death by 1,000 cuts,
Yeah.
because that's what the IRA companies have become professionals at: death by 1,000 cuts.
Yeah.
And remember, what is their one major goal? Is it to make you money? No, it is just to keep you alive. Because the longer they can keep that account alive, the more they're taking in that 3.5, some people say 4% a year from you. And how much is that? Are you ready? It's $18 trillion.
Holy
That's how much is
moly.
in IRA accounts at the big firms, $18 trillion. So IRAs are a wonderful, wonderful game to get into if you are Charles Schwab or Fidelity or Vanguard or etc. So with a self-directed IRA, you can invest in almost anything you want. You want to, we have people who've invested in some wacky things, and we have people who've invested in some very, very conservative things. Your real goal for most IRAs, we say, is to try and make shoot it for making about 10% a year. Now, you can make more, sure. We have lots of people who've made more. But we have people who made maybe less because they bought something that didn't work out as well. So, but really, if you shoot for 10%. So this brings up a huge question, and that is, should I convert my IRA to a Roth IRA? It's a big, big question. We get that question every day. So let me explain the difference between a traditional IRA and a Roth IRA. The traditional IRA, you make your contribution each year. You can contribute up to $7,000 a year. And if you're above age 50, was it 50 or 59? 50. I forget. You can put in $8,000 a year. And with a traditional IRA, you get a deduction, right? So let's say you made, $70,000 and you put in $7,000, you would pay income tax like you made $63,000. Okay, so you get a deduction. However, when you cash in that IRA in the future and you take the money out, the government says, wait a second, you've never paid tax on that money, so we're now going to tax you. Are they taxing $7,000? No, they're taxing the total amount you take out. So if you have put in 7777 and now you bought some property with it, you made another investment that was profitable, they're going to tax all the money that's coming out. So you end up with a traditional IRA, you end up not getting a tax break at the beginning, getting a very good tax break at the beginning. You don't pay tax on the amount that you contribute, but boy, when it comes out, bang, it is taxed. Now, a Roth IRA, and Roth IRAs just started in 1996. I mean, they're still kind of new. Started in 1996, and the Roth IRA very, very simply says, we're just going to flip that over and say you don't get a deduction on your contribution. So you do pay tax on that $7,000. If you made $70,000 and you put in a $7,000 deduction, you still pay tax on $70,000, the full amount. But when you cash out the Roth IRA at some point in the future, it is not a taxable event. So people say to me, oh, gee, I don't want to pay the tax now. I don't want to pay taxes. I don't like paying taxes. I understand. But you have a choice. Do you want to pay taxes now on the smallest possible amount? Or do you want to wait and pay taxes on a much, much larger amount in the future? It is so dramatic that I strongly encourage people to convert to a Roth IRA. Conversion to a Roth IRA is a taxable event. IRA Club will do all the documentation for you. You don't have to convert the whole thing at once. You can convert them over a period of time. I will tell you, the vast majority of people who do convert just convert and get it over with. But there are some people who do want to convert it over a period of time. That's fine.
Okay, so
So if you're on the fence about, I'm sorry.
I was just gonna say, we're coming up on a hard break, and I was just gonna suggest that we could touch on also the IRA into, you know, some of the technical ways of how we take an IRA into I'm sorry, how we take a 401k into an IRA. But we might have to take a hard break and then come back. But if you want,
Okay.
I'll finish off. We got like about 5 minutes, and then we can finish this segment and then come back. And then we'll just come back in on the next segment.
Great.
So go ahead, continue what you were saying. I didn't mean to.
Oh, okay, what I'm saying. Okay, so okay, so let's jump forward to that converting the 401k to an IRA. This is a very, very interesting little thing. We do this probably 4 or 5 times a day. I mean, we have a lot of experience converting 401ks to IRAs. We do at least 4 or 5 a day. Some days we do more than that. And the rule is quite simple. The rule is if you are with your employer, still, you're working for your employer, that money stays in the 401k. Cannot take it out. But once you have left that employer for any reason, they dismissed you, you voluntarily terminated, whatever it is, you're no longer with that employer, you can just let us know, and then we will contact everybody involved and take care of the documentation. It's a little sticky. You can call Fidelity, you can call Schwab and do this on your own. I can tell you the only advantage to using having us do it for you is that we literally call them 4 or 5 times a day. We know who we're dealing with there. They know who we are. We know who they are. It goes much smoother, and you don't have to, put in the password that you couldn't remember 20 years ago and tell them your blood type or God knows what. They know who we are.
So would you suggest with the hemorrhaging 401k that it would be an easier and smooth transaction to put it into a self-directed IRA?
Well, it's very, very easy and very smooth, and we do that a lot. Do I suggest it? I will tell you that we're not allowed by law to give investment advice. The regulation is we're not allowed to give investment advice. So, I mean, if you believe though that you have investment opportunities that you're seeing that are going to give you more reliable returns or more steady returns or more possibly positive returns, yeah, you're going to choose to do that. I will tell you something. I talked about the charges on IRAs. Keep in mind that mutual funds, which is what they invest in, have not matched the performance of the S&P 500 39 of the last 40 years.
Mhm, mhm,
But it's just because of all the fees that are dragged out of those things.
mhm. So now if you're going to take your money and you're going to be the bank and you're going to be an investor, anything that you get in the way of fees, you could make that up immediately by being the bank on your project that you're investing in, depending on what the project that you're investing in is going to bring in on returns, right?
Yeah, you're very right. Yeah, there are so many more creative investments available. We have a page on our on the website that lists some investment opportunities, not a lot, but some investment opportunities. We don't encourage any of those. We just they're there to give people ideas, and many really interesting investments out there that are maybe more exciting than mutual funds.
Dennis, we're going to have you back on the show again when you get back from your vacation. You're right now. You're going to. You told me you're going to be going to a wedding in Mexico City, I believe, on
Mexico
Monday,
City, yes,
and you're going to be
yes,
gone for about 2 weeks, right? Is that not correct?
yes. I'm packing my Pepto-Bismol as we speak.
So, what can people do to get a hold of you, or in your absence, what should they do? Who should they contact? What's the best way to get a hold of you?
Well, actually, it's just calling my office. God knows, no one wants to talk to me. Here's the thing. I am the owner of the company, and you know what that means. I have no idea what's going on. So really, the people who work with me are much more attuned than I am. Our phone number is IRA Club. You can go to iraclub.com and look at our website and shop around all you want. iraclub.com, pretty easy. And take your time. That's a new website. We're really pleased with it. Or you can call our office, which is 312-305-0592.
Okay, you're gonna have to say that again, a little slower so they can hear you, and then we'll put it in the show notes as well.
312. I forgot my number. How was it?
I
312.
do that all the time. I do that all the time. I am so glad that someone else is like me. I swear to God.
I got it. 312-305-0592.
Thank you so
And
much. You
yeah,
know,
the receptionist will answer. You'll tell that young lady who you want, or what it is you want, and they'll put it in front of somebody who is much more capable than I am.
I'm so grateful to have you on the show. I'm glad that we met all those years ago, and I'm really excited to have people introduce people to you and what you can do in your concept, along with our Edible Home Gardens Ranch and RV Resorts, and how they could be an investor and be the bank and take some of that money and stop it from hemorrhaging and start making more money and be the bank, right? It's all about being the bank. So, Dennis, thank you so much. You have a great vacation, and we'll talk to you soon. Thank you.
Thank you so much for having me. Good
Bye
night.
now.